guys, in the sense that it's really not a pure reopening trade or a pure stay-at-home trade. It's kind of perfectly both. Jenny, thoughts on this one, and as we come into a very interesting earnings report?
Yes, Alex, I actually had the exact same thought. It kind of reminds me of an Uber in some weird way, where we have the Uber Eats segment and then, of course, the Uber driver segment, where both sort of benefited from different parts of what we've seen over the past year. Because, of course, now with some of these parks reopening, this is great news for Disney, but there is this fear that Disney Plus subscriber growth may be slowing. So it is sort of a mixed bag there, but there is happy news when we talk Disney. On April 30th, they just announced reopening Disneyland in Anaheim, California, for the first time in 412 days. And even though the park is limited to about 25% capacity and only accessible to California residents, there's pictures of people on social media like in tears, like hugging at the park. It's like a very, very happy thing. And plus, we're seeing some of these restrictions sort of easing now in Florida, where Disney World is. But there is this concern that we're not seeing the same easing of restrictions globally. So Florida and California might not be enough to make a material effect. I also think it's important to know, I saw a lot of buzz on social media about these parks reopening, but they will not be taken into consideration in this current report because Anaheim reopened April 30th. This second quarter will ended on March 31st. So I think that's very important to keep in mind. Now, despite its recent pullback since peaking at about $203 a share, it is still holding about an 80% year-over-year gain. And they were actually able to turn a profit last quarter, surprisingly, which was the first quarter back in February, thanks largely to its Disney Plus, its Hulu, its ESPN Plus. But the street is forecasting another profit this quarter at about 31 cents a share on revenue of about $16 billion, which will signal a decrease for both of those numbers year over year, but still a profit nonetheless. Now, right now, of course, a lot of the buzz on social media and just with analysts alike is Disney Plus, which has sort of kept the magic alive for this company in a grim year because they've seen phenomenal subscriber growth, touching about 100 million subscribers within their first year and a half of launching. So they have been a huge success, and a lot of people are saying this sort of gives Netflix a run for its money that has been around much, much longer. But there is this concern now with the economy reopening that Disney Plus will slow, like we've seen in Netflix, which reported last month actually missing on their lowered expectations for their subscriber growth, only coming in about 4 million subscribers versus the 6 million expected. And Netflix specifically cited some of these COVID headwinds due to their subscriber growth, and they actually gave lower guidance going forward. So this would give me concern when looking specifically at Disney Plus, because I kind of think that they would be seeing the same possibly negative effects, which actually brings me to our first tweeter today, which sort of highlights the parallel between Disney and Netflix, which says, "This week I will be looking to start a position in Disney. Even at $184, I think it's good to add. Netflix's demise is Disney's gain, plus reopening of parks and big expected earnings this week." So what I thought was interesting about this is because they basically say Netflix's demise is Disney's gain. Now, I have to say, when it comes to Disney Plus, there's a possibility that Netflix's demise is also Disney Plus's demise, because a lot of times we see these sort of streaming companies in some way sort of reflect one another, because if streaming is going down, I believe it's probably affecting them all, not just Netflix. But our next tweeter sort of focuses on another streamer we're seeing in this space that also just had earnings, which says, Fubo TV, great earnings, and Disney up next, #streaming. So Fubo TV, a great example. They just had knockout earnings. They beat on growth expectations. They raised their full year guidance. They pretty much posted as great of earnings as they could have. And the stock is down over 4% today. So this does make me a little bit cautious with Disney earnings in terms of trading, because I think right now in today's markets, with some of the sell-off we've seen this week, that you could post great earnings pretty much on all metrics and the stock could sell off, Kevin. So that makes me a little bit cautious.
You're right, Jenny. The price action in Fubo is a little alarming in terms of looking at Disney Plus, but Disney, that is such a small part of the Disney story that's coming out. And the fact that the question that jumps into my head and I can't get out is, where would Disney stock be if not for Disney Plus, right? Where would this be? Because meanwhile, while all this is going on with the other parts of their business, what did they do? They started basically a Netflix. And now there's a Netflix embedded within the walls of Disney. It's an amazing story. And think about all the parts of Disney that are closed and didn't and weren't able to reopen. Theater, production in theaters, obviously resort, hotels and theme parks. How about cruises? How about ESPN not having sports? How about all these things that you can go through, and yet the stock is higher than pandemic. So, and when this all happens, when this economy opens, when everything is back to normal, the behemoth in terms of entertainment that Disney is going to be is really going to be unmeasurable. But that said, Jenny, you're right. In terms of Disney Plus, competition is there, and some of these stocks that have just one-trick ponies like Fubo and Netflix, they're starting to show a little wear and tear from the competition, guys.
Well, and the most interesting thing to me is that clearly Disney could have just sold its content out to companies like Netflix or whoever picked their streamer. But they had the kind of the foresight to say, hey, we have this massive content library. We can just do this ourselves. And then they had the opportunity really of kind of a lifetime in the sense of all the staying at home that we've done over the last year and some change and all the subscriber growth that they've had. So now they have a unique opportunity. They got to make sure that they execute strongly on this as things start to reopen and they keep some of that subscriber growth that they really got over the last year as a result of the pandemic to move forward. It's kind of a bright light on what was really a negative situation, to your point, Kev, that you wonder where this company would have been without Disney Plus. But they had it, fortunately. But Jenny, great setup as always. Looking forward to this report when it comes out later on this afternoon. As we say goodbye to Jenny, I want to welcome in the VP of Research at LikeFolio.com, Megan Brantley. Good morning to you, Megan. This is where I think LikeFolio's data can really be of assistance for investors, because so much of the Disney story is going to be what the real consumer wants, is feeling, where things are trending. And this is where your data shines. And so I know that there's kind of the two separate sides, one that's a little bit more stay at home in the streaming and one that's clearly tied to travel and reopening in the parks. What is the data telling us right now as we come into this earnings report?
I think it's really neat whenever we look at Disney, and the reason that we're kind of showing these two different sides is because it demonstrates how well Disney can shift as consumer behavior shifts. So as we're starting to see, streaming, which was huge in 2020 when people were stuck at home, as this starts to temper and people start to go outside, where they're going, they're still going to some type of a Disney establishment, or there's an option for Disney to still capture this shift in behavior back the other way. So as the pendulum swings, it's still swinging to Disney, I guess, depending on how you look at it. So when you look at this chart, this is mentions of people who are streaming like a TV show or a movie. So we really isolated these, where Disney Plus is. And what you can see is that these mentions are down about 30% year over year. And I say this because we're seeing this as an industry, trend in general. You mentioned Netflix earlier. We definitely saw that subscriber growth temper in Netflix, and we're seeing the same thing out of Disney. It seems to be about in line with this percentage breakdown. So whenever we look at the, Disney Plus new subscriber mentions, I think those are down about, 36% year over year. So this is right in line with what the overall trend appears to be. But then on the flip side, whenever we look at parks reopening, for example, we see an extreme amount of demand of mentions of people who are talking about either taking a trip to Disney or planning a trip to Disney. And we see those accelerating, especially even in the last month. So I think, these are these mentions, that green line are people who are talking about planning a trip or taking a trip to Disney. And I think you can see by that huge spike that we saw in July 2020, that's when Florida reopened, or Disney reopened their Florida parks. There was a huge, a lot of pent-up demand there. And now we're seeing that build and actually increase about 18% versus the levels that we were last month. So I think that this is a positive sign that Disney can point to. And I think that streaming, while, yes, that growth is tempering, whenever you look at consumer happiness, consumers are still very happy with the Disney Plus platform. They also have the ESPN and the Hulu. So I think that kind of what Kevin hit on, that Disney is this huge entertainment just behemoth, is how they're setting themselves up to be. And so we're seeing some of this, just the pendulum swing now back toward favoring that pent-up demand for these parks.
Megan, is your data showing, because this conversation is great, but we try to make money trading the stock and the direction of the stock. And here's the question. With these tapering growth numbers, even though Disney's, they reported in March over 100 million, you got to think it's slightly higher now than 100 million. But is the reopening of the rest of the company, right, and and which is not all the way reopened yet, right? Cruise lines are still not going. Disney has cruises. Production is getting going. There's a lot of things that are reopening. Is that enough? Is the positive story enough to get this stock higher, which is already 10% off its highs, right? Went from 203 to about 180, so it's a solid 10% off its high. What's the overall theme, though? Because long term, I get it. Short term, tomorrow and today, I'm not so sure, Megan.
I think that there are two things that you can look at, too, whenever you look at Disney Plus. While subscriber growth is down, I think, if people latch onto that, that's definitely something to be aware of. However, whenever you look at cancellation mentions, those are also down. We have Disney Plus cancellation mentions down about 38% year over year. And then you also have this introduction of new content. So whenever we're talking about the shows that Disney's are putting out, they put out WandaVision in the beginning of January, and we saw a surge whenever they released that original content series. And so that could be a draw for new subscribers, or at least, allow the existing subscribers to stick around. So I think that there's not necessarily a concern over churn. I think that they also are doing a good job of introducing these original content that consumers want to see and they want to watch. So I think that those are two positive signs for Disney Plus. But then I guess on the flip side, you do have to consider, is growth slowing down, at least in the US where our data is primarily focusing? Yes.
Megan, as we kind of close things out here, I know a lot of the focus will be on Disney Plus, but as the trends move away from legacy cable and the kind of the cutting the cord movement continues to gain momentum, how are the Hulu numbers looking? Because we know right now it's about half the subscriber base, but they make more money from Hulu as some of those premium plans that you can get with the live TV actually are more accretive to the bottom line for Disney. Is Hulu looking okay as well?
Yeah, I think that Hulu has that live TV component that consumers are increasingly seeking whenever they're cutting the cord from traditional cable. The other element that we're actually seeing from a quarter-over-quarter basis is ESPN. So that ESPN Plus that people can stream and watch live sports, that's a huge driver. I think that live sports component is also what helped to drive Fubo. And, whenever if you can envision a scatter plot, ESPN is over there closer to Fubo whenever you're thinking about these streaming and these live sports. So I think that that's a good point that, it's not just about Disney Plus. Disney has this trifecta bundle, if you will, of live TV, of family-friendly content, and also of live sports that's helping to kind of insulate these subscriber and support retention.
So then kind of closing thoughts here then, Megan, is there a feeling from LikeFolio in terms of your earnings score that you have for Disney, or is this just such a wild card because so much of it is projection towards the future that you guys are on the sidelines here?
Yeah, this is one where we cover elements of Disney, but we don't comprehensively cover Disney just because there are so many different components of this company. So we don't have an official earnings score heading into this report. But we can say, I would say two takeaways is that, yeah, subscriber growth may be slowing down, but retention looks really good for Disney Plus, and we're definitely seeing pent-up demand and positive signs for the consumers ready to get back in Disney parks.
Good stuff. The VP of Research at LikeFolio.com, Megan Brantley. It is always a pleasure. Have a great rest of your day, and we'll look forward to talking to you again soon. Thanks. All right, Kev. That's about as positive of a light to